And I'm certified financial planner David Somerville. I'm joined on today's show. Happy New Year, by the way.
Happy New Year.
It's January 2024. Here we go. I'm joined by registered retirement consultant Jason Pollock. So good holiday season, and here we go, right?
Beautiful.
Another year gone, and another year ahead of us,
it's going faster and faster, isn't it?
Exactly.
Crazy.
Hey, on today's show, I'm going to talk about, or in Jane, we're going to talk about a subject that I think I'm hearing a lot about. Everywhere you go these days, Jason, you hear it on the news, you hear it from friends, you hear it at the gym or wherever you go. It's Canada's upcoming mortgage crisis. And, you know, it's been a really tough couple of years. The Bank of Canada has been raising interest rates due to the challenges after COVID and the high inflation rate and so on. But I've got some information here I want to share with all of our viewers and listeners. But the data today that we get from the show, I've got it from the Bank of Canada directly. There was a report out. It was the Financial Stability Review with CMHC, which is the Canadian Mortgage and Housing Corporation data. And Jason, in the next 3 years, so 2024, 2025, 2026, there's going to be $1 trillion. If you can imagine that. I mean, that's a lot of money. $1 trillion in renewal mortgages coming due by 2026. And currently right now, there's a massive worry with most individuals, anybody who's got a mortgage coming due. I've got one coming due later this year. Thankfully, it's a low mortgage, and you know the impact won't be that devastating. But a lot of people are struggling with high mortgage payments. Right now, Jason, in the report, so 2/3 of Canadian mortgages will renew between 2024 2026. Of those that are renewing, 50% are going to renew between 2024 2025. So the next couple of years, we're going to have half of those renewals come due. The other half come due in 26, which is going to be just absolutely challenging.
For sure.
Because those in 2026 with a mortgage coming due, they bought in 2021 when interest rates were at the lowest point we've seen in 50 years.
Historic lows. And who would have thought that we'd be sitting here 3, 4, 5 years later, 5% higher in interest rates? Crazy. As you mentioned, so about 300,000 mortgages so far have come due. That's just since the rates have started to increase. So those people they're already feeling the pinch. So just a couple of stats here. In February 2022, the average mortgage payment was about $1,460. 2023, it jumped to $1,900. So that's about a 30% increase from 2022 to 2023. Now in 2024, if you bought in 2019 and now your mortgage is coming due, as you mentioned, yours is coming due, mine's coming due, we're expecting about another 15% increase. If your mortgage is due in 2025, you're going to expect about a 30% increase. And the big whopper is in 2026, if you bought in 2021 and you've got 5 years to 2026, expect about 45% increase in your mortgage payments.
No, it's going to be incredible, Jason. And one of the things I always talk about with our clients is, if you look at the foundation of financial planning, it's cash flow, money coming in, which is really critical to fund your lifestyle, and debt. And for those out there right now that have a mortgage coming due, it's a really good time going into 2024 to start looking at, where do I spend my money, obviously, what money's coming in, you know, what money's going out. And, you know, Jason, quick point here is, what does a high mortgage mean to the economy, right? So you look at the fact that with $1 trillion of mortgages coming due, and let's say the average renewal is going to be about 30%, that's $300 billion that doesn't get back into the economy. And the Bank of Canada has been trying to get inflation down, which inflation's gone from, 8 or 9% a year ago. It's down to 3.1%. But again, there's less disposable income. And, you've got mortgages are going to impact people's spending. So in a typical family, the increase in mortgage payments is about a 20% reduction of disposable income. So that's 20% less money you have to spend on eating out, on clothing, on groceries, on things like that. So households are going to have to restructure their spending, which it's difficult, right? I mean, you go, you live, you eat out, you do what you want to do. To not eat out is difficult. To not travel is difficult. And again, there's another consideration that some people with the higher mortgage rate and the higher payment, they may have to at some point even downsize their home.
Yeah, like you said, it's hard when you create a habit over a couple of years of going out once a week or twice a week. It's hard to scale that back, but people are going to have to do it, right? But the biggest concern, of course, is mortgage defaults, right? So, but thankfully, it's only a small percentage so far. The banks are already they're increasing their loan provisions. They've done that. They've started to do that in 2022 up until now. Just a couple of stats. Up to about $7 billion in the first 3 quarters were mortgage defaults in 2023, and that was up from $3.2 billion in 2022. So things are increasing a little bit, but thankfully it's still a small amount.
Exactly. And just some housing market stats these days I came across from CMHC. So right now, if you look at mortgages in Ontario, so 81% of mortgages, so 8 out of every 10 mortgages is done through a prime lender. So that would be one of the banks, one of the major banks. 7 out of every 10 mortgages is fixed, and the balance are variable. So you've got a lot of people that have, again, the good thing is that with these increased interest rates, those that have variable mortgages is very small in comparison to those that have fixed. So they've already been dealing with the impact of those higher rates, but the big money's coming soon with those fixed mortgages coming due. Also, too, some really cool stats here from the Ontario Real Estate Association, and so in 2023, October of 23, these stats came out. Sales are down about 7.6% from a year earlier. So again, sales in October are down about 7.6%. Sales year to date are down 13% from a year ago. We're seeing new listings are up 25, almost 26%. So, when you drive around your neighborhood these days and you see a sign on every other home, because new listings are up 25%. And right now, in Ontario, this is pretty interesting. There's over 50,000 active listings on MLS as of October of 2023. 50,000 people in Ontario have their home up for sale. That's a 35% increase from 2022. The other key point here is that the average time to sell historically is about 2.6 months. As of right now, it's about 4.3 months. So we've almost seen the sales lag, where it would have taken 2.5 months to sell your home, your condo, whatever it may be. That's actually almost doubled with today's challenging times. But the good news is, obviously, going forward, for those out there, there is some good news. Not a lot of good news, but there is some good news. We always try and find some good news here on It's Your Wealth. But, the good thing is that most people are staying in their homes. So there's only, the default rate is just below 1%. So, those that are coming up for renewal, the majority of people are making it work. Prime rates are looking more attractive. So we are seeing interest rates come down a little bit as maybe where things were 6 months ago. Mortgage brokers, this is a cool bit of information, is mortgage brokers have more flexible lending guidelines than traditional banks. So if you're out there right now and you've got a mortgage coming due and you're looking at moving it for whatever reason, again, you may want to get your bank to quote it if that's where it's at today, which is where most mortgages are. You also may want to have a mortgage broker quote it because they have a bit more flexibility. Now is the time to get a good credit. If you've got good credit, make sure you've got good credit. Don't run out and buy a pickup truck and take on excessive debt. You know what? Again, with your mortgage, you want to get a second opinion. It's a good time right now to kind of get your family budget in order. Again, nothing better than in the new year, sitting down, looking at where you spend your money and getting rid of all the waste. And the final part here is that lenders really don't want to foreclose on anybody's property. So the banks, the mortgage people, they're doing all they can to extend the term of the mortgage, extend the amortization, change your payment structure. So, nobody wants anyone to lose their home. It's one of the most precious assets we can ever own. But it is a unique time in the marketplace, and again, you better be strategic and tactical when it comes to your renewing mortgage.
Yeah, and tighten the belt, and you just nailed it. You've got to shop around. Hopefully, you've got good credit, and make sure you're getting the right recommendations.
Exactly. So, Jason Pollock, again, thanks for coming into It's Your Wealth.
Great to be here again.
The New Year's edition.